Hey guys, it's Jeff here. So this is going to be the second part of the EU GU top-down analysis video. But in this video, what I'm going to do is I'm going to show you how to basically frame the setups for the week. Like I'm going to show you the setups that we could have traded this week on EU and GU and how to frame that from a higher time frame standpoint down to the lower time frames to find your entries. Okay, so basically how to frame your setups from a top-down analysis standpoint and how to hone your entries on the lower time frames based on what you find with the higher time frame directional bias. Okay, so if you guys haven't watched the videos on how to determine the higher time frame bias and how to implement the daily bias when we find it, please do that. Go back to the video album and watch those videos so you understand what I'm talking about when I talk about this pattern that I'm going to show you right here. Okay, so we're going to go over to a daily chart, and this is how you're going to frame your setup for your higher time frame directional bias. You need to look for a swing high pattern as shown here. Okay, you can see here, this is the swing high prior to this week. Okay, now I've marked the high and the low of this week. So this was the range that EU gave us this week, and this was what we could have traded, okay, this week on EU. Now we're not trying to catch the entire range, okay? I'm not looking for you to catch the absolute high and trade it all the way down to the absolute low and catch this whole thing. What we want is just the lion's portion of this move, okay? We just want 50% or more of the pips on offer here, okay? So if I measure the whole range of the week, EU dropped about 150 pips this week. Okay, so really you're just looking for about 70, 80 to 100, something like that, like 70 to 100 pips on offer that EU gave. If you can capture that, that's good enough, right? That's the lion's portion of the move, and that was a successful trading week. So this is how you basically frame that setup and how you can catch the move here, what you could have done this week. All right, so looking here, we have our 3-bar pattern. Okay, we have this is the high, the swing high here. Then we have a lower high to the left, right? And then a lower high to the right, okay? And then we have our 3-bar pattern. Now the third candle's low is what we're concerned with when we find this pattern, okay? It's not just having this swing high that confirms the direction. Now what we need to see is we need to see the third candle's low, which is right here, get broken, and that doesn't happen until this candle right here. So the very next candle, the fourth candle, gets close, but it doesn't. It comes back up and closes above, right? The next candle doesn't go down, it actually goes up, okay? And it isn't until this candle right here that comes down and breaks the low, okay? You can see the wick comes all the way down here and takes out that low. That's what we're looking for in terms of the confirmation of the directional bias bearish, okay? Once that happens, okay, then the very next candle you can be looking for a short setup in the direction of this bias that you just found. Okay, I'm going to repeat that one more time so you guys understand exactly what I'm saying. Okay, so look for your swing high pattern. We have a high here. Okay, this is the swing high because we have a lower high to the left and a lower high to the right. Okay, then on the third candle, okay, on this candle's low, that's what you're looking for price to break. Okay, you need that to break the low, and that confirms the higher time frame direction. Okay, once that does that on this candle here, the very next candle, and this is a daily chart, so this is in terms of days. Okay, so on this day right here, which is April 24th, that's when you can start looking for a short setup. Okay, notice how long it took for that to set up. You're not going to get a setup every day, every day of the week, okay? You're looking for the most high probability setups that's going to give you the most success, okay? And if you're doing that by looking for a setup every single day, you're going to get, more losses than wins that way. You're going to try to force setups that aren't there, okay? So this is how you frame a high probability setup. You're looking for a confirmation of the direction and the confluence in the higher time frame bias. And then once you have that, then you can go down to a lower time frame chart to find your setup. Okay, so here on April 24th, okay, let's go over to a 15-minute chart. Okay, and then we'll look at how we could have framed that setup and how we could have caught that move. Okay, so here's Monday, April 22nd. Here's Tuesday, April 23rd. This is the day you're looking for a short setup, okay? Wednesday, April 24th. All right. Now, we missed this move here on Tuesday, okay? So this move from this high to this low is about 60, 70 pips already, all right? We're missing that move. That's okay, okay? Because you don't know, based on what happened prior to this move here, Friday we moved up, Monday we moved up. We could have moved up on Tuesday as well, okay? In terms of, the bias, we weren't clear on it. We were still, 50-50. So this move confirms the downward bias in the higher time frame. Okay, this gives you your directional bias, and this gives you your bias short for the rest of the week. So once this happens, okay, then on Wednesday you're looking for shorts. Okay, and how do you do that? You look for session open times, London open, New York open, and you're looking for patterns, or you're looking for setups that we have covered. And that could be anything that you are familiar with. Now, you don't have to always have your setup occur on the charts, right? There's a whole different array of setups that you can learn. There's the 50 EMA bounce. There's the zone flip setups that I talked about. There's the London patterns, type 1, 2, and 3. There's a whole lot of different setups that you can trade. So even though you have the right direction and the right bias, sometimes your setup doesn't appear on the chart. Okay, so you're also going to sometimes miss setups because of that, and that's okay. If you still practice them in back testing, you'll be able to train your eyes to see the setups regardless, over time. And that's really the key, is getting the consistency to see them in back testing, and consistency in testing is the only way you're going to be able to see them live when they happen in front of you. Okay, so here's Wednesday. Here's our bias. Okay, we're looking for shorts. Basically, what we're looking for is we're looking for price to be at or above the day open price. Okay, now the day open price is here. You guys can't see that as well on this chart because it's kind of covered, but this is the day open price line, all right? And you can see it's just above the Asia box line, okay? But we don't really get above it, right? We're pretty much at it, okay? So this is one of those situations where we're at the day open price, okay? And we're looking for a setup short at this specific time, okay? London open. Now you can see here London creates a high here. London open creates a high, and then we start to trade away, right? Now, if you miss this move, okay, you have confirmation now that the bias is going in your favor. What you can do is you can look for a setup in New York, okay, if you missed this, and look for a setup in New York to trade that setup short, okay? And you can see New York gives us a nice ID50 bounce here, okay, for a setup short for another nice 60, 70 pip move, all right? This here, okay, we could have taken as a multi-session M, or a type 2 London pattern M with the first leg in Asia, okay, with the shift here of the 13 shift candle below the 13. You can see here right there, right? And then the stop loss could go just above the Asia high right here, which is 16 pips here, but if you want to be safe, you can do a 20 pip stop, all right? And then we could look for a move downward here for about 70 pips. Now, you're saying that, we didn't get a confirmation on the TDI, but what did we say about a second leg nameable pattern? You notice what pattern this is we have an evening star, okay? We actually have a pseudo railroad track here as well, but we have an evening star second leg pattern, okay? So we don't need a TDI confirmation. We can just have the shift of the 13 is a good confirmation along with this second leg reversal pattern. That would have been good enough, okay? And then you could put your stop loss above the day open price of the Asia high here, or above the 200 EMA if you want to be safe, 20 pips, okay? And you can see you have a nice 70 pip move potential, right? Like I said, if you miss this move, we get another move down here, okay? In New York session, we have a spike low and then a retracement back up to the 50. Here's your ID50 move short, okay? And obviously you have to wait for the close of this candle here on the 13. Okay, and then this is where it breaks the signal line and also the market baseline. Because this is a bounce, a second bounce, okay, here, okay, this is actually an ID safety. So we have to wait for a close of the signal line and the market baseline for this setup. So right here was your setup short, stop loss above the 50 EMA here, another 20 pips, and then a nice 50 pip move down potential. So if you caught both of those together, okay, 70 pips and 50 pips, gave you 120 pips on offer, okay? And if you would have caught, you know, just a portion of that, that would have been fine as well. Okay, your target for this was only just to catch the low of yesterday's low, which was right here. This shift here in London did that, okay, and then it did a continuation after this. So if you traded this setup in London and you were looking for a move to below yesterday's low, that was probably your first TV target there. That would have been a nice 30 pip move already, okay? And then you're looking for continuation in New York session, and you may or may not have traded this, because if your objective was met here, you might have let this go. But if you missed this and you were looking for a move in New York session, this was your setup here. Okay, now the low of the day is created here. Okay, you can see that here with the blue tracer. The very next day, what's our bias? Our bias hasn't changed, right? Because we've taken out yesterday's low, all right? We're still looking for price to take out the low of yesterday, which was here, okay, if you can see here. And we're still looking for sells at or above the day open price, okay? In our session times and key areas, which is London open and New York open, okay? So here we have Asia session for Thursday, all right? Here's the Asian range. London open starts, and we're at or above the day open price here. We have a small poke above the Asia box right here. Okay, and then here we have a shift candle below the 13 EMA. This right here is a what? A type 2 London pattern, right? Right at the Asia box. Or you could even technically call it a type 1, because we had a shift, or sorry, a stop hunt above the Asia box. Okay, so here's your shift candle. There's your close below the signal line and below the market baseline right there. You guys can see that. Okay, there's your entry short. You can get a little pullback entry even here. All right, your stop loss goes above the high, the swing high here is only 10 pips. You can even be safe and make it 15. You have a nice 30 pip move down to the downside here to the low. We took out this low with this move here with this spike. Okay, that was the objective. Okay, so once it does that, once you take out that low, okay, that was about a 19 pip move to take out the low, right? Then you can set your trade to break even, right? Because you don't know if once it does that, it's going to come back up. And you can see it comes back up. It might have tapped you at a break even at that point, right? So depending on how tight you put it, or you could have just reduced your risk and kept it above this high here, right? That might have been a little bit too close if you saw that. But you can use the 13 EMA trail as well. You can see that held very nicely, the 13 EMA, and then it would have prevented you from getting stopped out from taking a nice trade here at 30 pips. All right, New York session comes back up. It gives us a tracement. Okay, bounces right off of the the day open price, right back here at this level again, and then we had a nice ID50 bounce short right here. This was a little bit late in the day, but right here your ID50 short crosses the signal line, traps the static, and then this would have been only about 10 pips or so to end the day. So this was not a greatest setup, but you can see here that this was also a short objective that we could have taken short. Right. The key was that we wanted to get below the day open, yesterday's low. Right. When we're looking for that the bias for the next day, your target is going to be continually looking for yesterday's low. We got below that here. Okay. So once that target was met, then you have to see what price does afterwards. If price had taken out this low and come back up over the day open price and closed above, okay, and we opened higher, then we would have to look, we have to take a step back, okay, and then we would probably stay flat on the next day, because we don't know if this is going to be turning around. All right, but since we rejected the day open price, we closed lower for the next day, and you can see that we opened lower the next day. Our bias remains the same, okay? And going into Friday, you can see here Friday that we had yesterday's low here, okay? So our target is still this low, and we're selling short at or above the day open price, okay? Now, this move here is news, okay? So if you're on any other day, okay, you're still trading this short, okay? And you're avoiding days of red news, okay? So this is probably a day you want to avoid. All right, but let's just take that out of the equation here and look at what happened anyways, okay? So we have day open price, we have an M here, okay, a type 1M with a shift below. Okay, here's your entry short, and you're looking for a short below the day open price, or sorry, above day open price, and you're looking for a target below yesterday's low here. Okay, so right here with a stop of 15 pips, okay, you can see that price actually went down and took out the low here on this new spike. Okay, so you would have made your target, okay, 25 pips here to below this low here, and then the news shot this up, and then if you had your stop at break even at that point or something like that, you would have gotten taken out. Okay, but you're not trading red news obviously, but you can see here that we still took out the objective. Okay, even though there was manipulation here on Friday, your objective was still met. You still would have made your 25 pips right here. Okay, so tallying up what we could have traded on EU, okay, starting from without trading this day. Okay, this day was our confirmation day, so even though we missed this move here of 60, 70 pips, look how many pips we still were able to catch intraday. Okay, from here to here we have 30 pip move, and then from here to here we have a 50 pip move. Okay, so that two setups there, 80 pips. This move here, 30 pip move, okay, 110 pips, and then this move here, 25 pips. Okay, so we had 130 pips potential, okay, and all we were looking for was 75 to 100. Okay, so breaking that down into an intraday setup framework, okay, with a higher time frame bias that was determined on the daily chart with this pattern here, okay, that's how you should be framing your setups every week going into the trading week. Okay, now if you just wanted to do that on a swing trade standpoint and not trade this intraday, okay, if you're thinking, man, I don't want to go through it every day and look for setups like that, I just want to catch the meat of that move, you can do so just with this framework and this directional bias setup in mind. Okay, because once, like I said, once this candle closes, okay, below this, or sorry, once this candle takes out this low, the very next day you're looking for shorts. So the very next day you could just be short here, put your stop loss above the swing high, which is a 40 pip stop loss, and you're looking for a move below these lows here, right? So this move here was below this low here is 55 pips, okay, and your stop loss is 40 pips. So you're getting better than a 1-to-1 on this, and once you get to this point, you can set your trade to break even and just let it run. Okay, and then you can see you would have caught over 100 pips to close out the week. All right, so either way, if you want to do it intraday or if you want to do it in a swing trade setup, on a longer time frame perspective, you could have caught over 100 pips in both scenarios and made out pretty nicely here on EU. Okay. All right, so I'm going to do this also with GU. I'm going to show you GU's setups, and then we can close this out. So take a look at GU here. All right, and the same thing that I talked about on EU, right? How we frame our setup on the higher time frame. We're looking for a swing high pattern. Okay, so you can see here the previous swing high pattern was here. Okay, this is our weekly range this week on GU. This was the high of the week. This was the low of the week. So we're looking to capture this range here. Also 150 pips, okay, the lion's portion of that move. Our swing high prior to this was here, so we had this high here, lower high to the left, lower high to the right, and we're looking for price to close below the low of the third candle. It does that on the very next candle right here. So we really could have been looking short since the week prior. Our bias was still short since the week prior. So here we could have been short 1, 2, 3, 4 days already going short going into this week. Okay, so really in the start of the week we could have been looking for short setups on Monday. So let's look at a 15-minute chart, and we go into Monday. So Monday we were looking for here's Friday's low, yesterday's low right here. Okay, and so we're looking for our target is going to be Friday's low, and we're looking for short setup at or above the day open price, right? So here's Monday, here's the day open price. We start off the week, price comes up in London session to the high up here. This is going to be a type 2 setup, right? We have an M, shift below the 13, right there. Stop loss, super tight stop loss, right? Maybe a 10 pip stop loss here. You're looking for the low, which is 15 pips, so just below that. Okay, so more than a 1-to-1, and you get that right there. Okay, you get that prior to New York. You had a little bit of a pullback here, an ID 50 move. Okay, so another setup short you could have taken right here on this candle, with also another 10 pip stop loss, and you're looking for a move down below. Now, this move probably stopped you out, or you might have closed out with a small profit because we didn't get much movement. But this is also Monday trading, so this is a day where we're not expecting too much to happen anyway. Monday is usually like a consolidation day, and this is the day when we usually observe anyway. So I'm just using this for example's sake. I probably wouldn't have traded this on Monday, but you can see that with that bias in mind from last week, it still played out by taking out the low of yesterday. Okay, and that was your framework. Now going into Tuesday, okay, since we closed lower, okay, here's our opening price, right? Our bias isn't changed, right? We're still looking for prices to go below yesterday's low, and you can see yesterday's low was right here, the bottom of this this range here on the Asia box. Okay, that was yesterday's low, and we're looking for price to go short at or above the day open price. Now, here's where you might have gotten stopped out on a setup, okay, where the trade takes you out and then goes massively in your favor afterwards. Okay, this is one of those days where you might have caught some frustration, but if you have the confidence to enter again after you get stopped out, okay, that's when you're going to start to develop nerves of steel in your trading and get better setups and better results. Okay, so here's what a situation that could have happened in this case. So we have a London high that's created here, okay, a London high that's created a little bit afterwards right here in the shadow box. Okay, so right here we have a possible short. Okay, now we have an evening star, okay, or a pseudo evening star, but we don't have a shift below the 13 EMA. So if you had taken this short prior to this this confirmation, we didn't get a confirmation, so you probably wouldn't have entered this anyway if you're following the rules. But let's just say you took this trade anyway because you're looking for a stop hunt above the Asia high, and you saw this move down. You're thinking, okay, I'm going to take a short. The stop loss here, okay, above the high, or you can make it above yesterday's high here, which is probably safer, is about 20 pips. Okay, so you can see here they push price up and they probably took you out with that move, right? But if you're able to get in here, okay, you can see an advanced M pattern, all right, a shift below the 13 here, okay, and right here is also a break below the market baseline and the signal line, right? So this was an advanced M pattern short. You could have shorted this, okay, and then you can see the very next candle here went all the way down and took us down about 75 pips to the end of the session, right? So if you were able to enter again here, right, and take that after getting stopped out here, or you might not even have taken this trade, you might have actually waited for this because we didn't get a confirmation, right? But this was your setup right here, this move short after the shift candle, stop loss above the high, 20 pips, and you would have gotten a nice 70 pip move out of it, okay, and end the day in consolidation. Right, New York session gave a little bit of a pullback, but nothing really we could have taken in terms of a continuation setup, right? Unless you traded this pullback for some reason, thinking that it was just going to hold the 13, something like that, right? Not really a setup we have, but maybe you have that intuition, that foresight, and you can take those moves, right? Going into the next day, we have opening price lower, right? So what's our objective? We're looking for price to get below yesterday's low, which is right here, the blue tracer you can see here at the bottom of the Asian box, right? And we're looking for price to sell at or above the day open price, right? This is another day where you could have gotten hung up here. We had a shift here below the low here in London, okay, and then a move back up, right? Now this was this is a fake out move, obviously, right? We have a inducement of breakout traders short, okay, to take out the low, yesterday's low, and then after that a false move upwards, and then a continuation down, the real move in New York. Okay, so this is another one of those where if you get stopped out here, okay, maybe you took this shift candle short, or maybe you took the pullback here thinking that this was the move short, okay, and the stop loss would have been very tight as well, 15 pips or so. You would have gotten taken out here with this move, right? New York session, right? You have a 3 3 hits to the high here, and then an M pattern short after the shift below the 50 EMA is what confirms on the TDI. Okay, this would have been an M pattern in the New York session. And then you have a rather large stop, 30 pips above the high, but you can see it played out when give you 50 pips potential at the end there. So if you got stopped out here and you were able to catch this move in New York, okay, railroad track second leg, you know, right here, this you could have entered for a tighter stop loss of 15 pips on the second leg name wall pattern. Instead of waiting for the shift of the 50 here with a TDI confirmation, you can enter earlier here on the railroad track and get a tighter stop loss of 15 pips. Then your risk reward would have been a 4-to-1 instead of just barely over a 1-to-1. Okay, look at the difference in risk to reward. Okay, so that was a nice 60 pip move on offer there, and you would only have caught that after you you know, if you gotten stopped out in London session, catching that and being confident enough to enter again and follow the bias, okay, regardless of seeing a move like this. Okay, that's only going to come with you know, chart time and experience and seeing these happen over and over again. Okay, and also with back testing, and that's where also the strategy tester comes in handy. Okay, so here we go. Next day, we drop lower, right? Opening price is lower. Low of the day is here. So what's our bias? Our bias is still short because we haven't changed anything, right? We haven't gone above the day open price. We haven't closed above any previous highs. We're still looking for price to go below yesterday's low. So here's yesterday's low. Here's the day open price, okay? Now we're looking for setup short at or above the day open price. Now here's an M, okay? Evening star, shift below the 13, okay? There's your confirmation right there. 15 pip stop. Target is below this low. You got that right there. And then it came up, bounced off the 13, and went lower, gave you 35 pips. Okay? Then it came back up. If you set your trade to break even, it came back up and took you out here. New York session came up to the highs just below it, okay? And then gave us a nice shift down here. Right here for an M setup here, but this was a little bit too late in the day, right? Probably would not have traded this at that point. Okay, and you can see we closed the day in consolidation, right? And what did we do? We traded the next day. We closed lower, even though it's very, very close. We still closed lower, right? Our bias hasn't changed. Going into Friday, we're still looking for shorts below yesterday's low. Where's yesterday's low? It's right here. Okay. Now this day may or may not have got you. Okay, but like I said, this was a news day, so we're probably not trading this day anyway. But just for example's sake, we're gonna try to let this play out. Okay, so here was Thursday's low. Okay, here's the day open price, right? And here's London's high. Okay, so we create a London high. No pattern just yet. We got a shift right here. Okay, a shift back up and a shift back down. Okay, so kind of like a cord of wood. So right here, you could have entered short. Okay, with a stop loss of 16 pips. The news spiked it down. You can see it came down all the way to 25 pips. It didn't quite get to our low. If it did get to our low, it would have been a 40 pip move, but it didn't quite get to our low. So once you got down to this area here, if you didn't set your trade to break even, you might have got stopped out. Okay, and then that would have been a you know, a loss day. Now those are going to happen as well. But things that you have to take into consideration is obviously one is news. Okay, and because it is Friday and we have already been going down for so long, okay, we made a potential low of the week, we could be looking at a reversal or retracement on Friday. Okay, so that's one of those things that you just have to, you know, that also comes with chart time and experience, right? Those are one of those things that you'll figure out on your own. Okay, but tallying up the setups that we had for this week, we can see that we had this trade right here, for argument's sake, 15 pips. This trade here, 70 pips, so we had 85. This trade here, 60 pips, so that's 135. And then this trade here, 35. So that's, what is that, 210 pips already, and then this trade would have been a failed trade. Okay, so 210 pips on offer, and we were looking for the whole range of the week was 150 pips, so we're just looking for the same thing, right? About 70 to 100 pips. So out of 200 pips on GU, if you were able to catch even 70 to 100 pips of that, okay, that would have been good, all right? On an intraday level, you're going to be able to catch more pips because you're taking setups like this every day, and you're extracting more from the market after the pullbacks and things like that, right? If you're looking at it from a higher time frame swing perspective, okay, you could have been short already back over here, right, on this trade, or on this candle on this day. So, but just in terms of the range of the week, Monday we were looking for a possible short. You could have entered here at or above the day open price, and you could have caught the full range, about 130 pips or so this week, just doing a swing trade standpoint. If you caught it back here on the low of this candle here on this day, let's just say you got in somewhere around here, then that would have been a nice 180 pip swing that you could have been holding throughout the week. Okay. Now we're still bearish on this, right? Our low is going to be here, our long-term low. We're still looking for prices to get down below that, and we're still looking for lower prices so long as price continues to break the lows of each subsequent day. Now you can see here that GU, we have a 3-bar pattern to the upside. So now this is going to be interesting on Monday, because if we see a candle break above the high here on GU on Monday, then we might be looking at a swing reversal retracement, okay? Which is what I kind of covered in the top-down analysis in the first video, okay? All right, so a little bit longer video, guys. And like I said, it's probably going to take some more time, but hopefully you got a lot out of that, and hopefully you guys understand a little bit better how to frame your setups for the coming weeks. And you know, this is what you should be doing in terms of top-down analysis, and then refining your entries by going into the lower time frames every day. All right, hope that will help hopeful, guys. And if you have any questions on anything that I talked about today in this video, let me know. And otherwise, good luck in your trading, and I'll see you guys in the chat rooms next week.